My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, put it in context. Call me, 1-800-743-CNBC. Tweet me, @JimCramer. A few years ago, if I told you that a drone raid was about to take out half of Saudi Arabia's production and our stock market would barely blink, you would have called me absolutely crazy. Yet that's exactly what just happened, with the Dow slipping just 143 points, the S&P declining 0.31%, the Nasdaq backsliding a meager 0.28%. Even though the price of crude spiked more than 10%, gigantic gain. How the heck is that even possible? How could we have so many stocks that actually rallied on the news? Simple. We're a changed country. We have so much oil in this country, and we have a lot of stocks that now do better with higher oil prices. And, as well, we have a lot of stocks that thrive if higher oil causes the economy to slow. The United States of today looks a lot different from the United States of even 10 years ago. First, let's understand. It looks like Iran launched drone strikes that wiped out a huge chunk of Saudi Arabia's oil infrastructure, and they're the biggest exporter of petroleum in the world. That sent the price of crude soaring, the biggest gain in 11 years, and higher oil translates into higher gasoline, which means consumers have less money to spend or you're just going out to shop. So we had a big sell-off from retail. Made perfect sense, especially since they've had a humongous run, and we were looking for a reason to take profits. Remember, last week I told you that my proprietary oscillator that's put out by Standard & Poor's, the one I pay for, well, then it was too high, at +8. Anything north of 5 means that you should be doing some sell. And that made this market vulnerable. I said that meant we were due for a sell-off, even if I couldn't tell you the reason why that sell-off might happen. Remember, I did 2 shows on it. This oil shock is exactly the kind of out-of-left-field incident I was talking about. And it caused a lot of carnage, even if it wasn't obvious from the averages. Beyond retail, which did indeed get pummeled, except for the value plays like Macy's, at Nordstrom, the big packaged goods stocks just got slammed. I want you to think Clorox, Procter & Gamble, Estee Lauder. They're all regarded as having a big reliance on plastic for their packaging. Plastic is made from oil. And they've also got substantial freight costs. Again, those go higher with oil. But Procter's been a monster stock. I mean, Estee Lauder's been incredible. Again, all you got was profit-taking. Naturally, the airlines got hit too. American, United, and Delta all posted outsized losses. So there were real areas of weakness. But the truth is, this market held up incredibly well. In the old days, the averages would have plunged on this kind of oil shock. I know, because I've lived through a bunch of them starting in 1973. We'd be freaking out about surging inflation and gas lines and a huge decline in consumer spending. Now, though, Saudi Arabia losing half of its output, it's just not a big deal. Remember, the United States has gone from producing 5 million barrels of oil per day, gigantic importer, to 12 million barrels per day. And we do a lot of exporting. Over the same period, we put policies in place that make our nation a lot more energy efficient. Who needs Saudi Arabia? If you listen to Scott Sheffield when he came here not that long ago, he's the CEO of Pioneer Natural Resources, and by the way, the dean of the oil patch, he said it won't be long until we're producing 17 million barrels a day. That's astounding. If the Saudis can't pump, they simply just gives American producers a much-needed spike in profits, allowing them to pay down debt and take control of their finances. But in the end, though, our producers are going to sow the seeds of their own destruction. Remember when Randy Brazil from RBN.com came on here and said that they keep spending and they just hurt themselves? Because whenever the price of crude goes up, they just start drilling again. The new supply pushes prices right back down. There are only 3 things that keep a lid on American oil production currently. First, we don't yet have enough pipelines in the Permian Basin. There are 2 about to open. That's the incredibly cheap oil-rich region in Texas. Second, we don't have enough big ports to handle those gigantic tankers that can hold 2 million barrels. And third, until the recent rollback, the government didn't allow excessive flaring, meaning that burning off of natural gas byproducts that comes when you drill for oil, because it's terrible for the environment. Before today's spike, natural gas was so cheap that it wasn't even worth keeping. If you couldn't flare it off, it was an impediment to drilling oil. I don't expect anything but a short-term reprieve here on any of these issues, although some oil companies have started taking advantage of the pro-flaring position the president has staked out recently. However, most of the larger producers are reluctant to embrace the new rules because they don't want to ruin natural gas's reputation as cleaner fuel than coal. Remember, it's taking a lot of share from coal with utilities. Either way, when the price of crude soars, the oil stocks soar with it. Today, they were up so much that they buoyed the entire S&P 500. Rally in Exxon and Chevron helped prop up the Dow. Without them, we would have been a lot lower. That said, my Chapel Trust was a big seller of the oils today. I don't think this move is sustainable. Obviously, we left some, but time to go. These millennial money managers, they don't want to own any of these oil stocks. Now, I want to take another whole approach to this situation. Consider what the spike of oil means for, not us, but for our trade war partner, China. The People's Republic has a lot going for it economically. Hey, say what you will about the Chinese Communist Party. They did create 400 million jobs in a relatively short period of time, even though a lot of it was taking jobs from us. But there's one thing that they don't have: natural resources. For China, any disruption in the oil supply is very bad news. Their government has slapped tariffs on U.S. oil, but you know what? They're still using about 1 million barrels a day that originates in our borders. Oil is an international commodity. And now the price of crude has surged, making a real slowdown there far more likely. Beyond the oils, what else rallied today? Let's say we saw strength in the secular growth stocks that don't need a strong global economy to make their numbers. Think the cloud kings like ServiceNow, Workday, VMware, Adobe. That's an amazing sign of resilience in itself. And if you stay tuned, I will tell you which ones are still worth snapping up. Buy. Not long ago, the cloud stocks were getting hammered. Now they're benefiting from fresh rotation out of the consumer packaged goods stocks into the stocks of companies that are unaffected by oil that can still grow. That's why I think it's entirely possible that we could shrug off this news. Maybe the next thing you know, the Saudi oil facilities will be back online. However, it is also possible that we have a brand new world of worry, and I'm talking about those 10 drones used to smash Saudi Arabia's infrastructure. They demonstrate a serious vulnerability for the Saudis and really any country. If you want to stop these drone attacks, you need to have vastly expanded radar, something that's great for Lockheed Martin, Raytheon, and L3 Harris Technologies. Of these, L3 Harris is my favorite, but I don't like to chase a stock that's up more than $6 in a single session. Honestly, I think the military side of things is the most worrisome here, especially as the president tweeted that we are, and I quote, locked and loaded and ready to retaliate, presumably against Iran, the moment the Saudis check off on him. We really don't need a war with Iran right now, but who knows what that tweet even means. And by the way, just so you know, if you could have solar-powered drones, well, think about it. They could go the world over. That's a worry. I'm worried about it. The bottom line, I know this stock market's resilience could melt if the White House decides to make an all-out strike against Iran. But, man, I got to tell you, it's amazing how the averages pretty much shrugged off such a major decline, something that would have been totally impossible to even think about a decade ago. And that's worth keeping in mind. You know what? I'm calling today a victory for the Bulls. Patty in Florida, Patty.
Hi, Jim. Thanks for taking my call, and thanks for all you do for us. My question is about Okta. I bought it at 115, and I'm in the house of pain. So I want to know what your opinion is on the price drop, and where do you see it going? Okay, I think Okta is just a terrific company. I think that you have to take the same long-term view that management does. It is really, yes, they've rotated out of these stocks. I have total faith in Todd McKinnon. You know, Todd appeared on a Squawk Box the other day. Besides from hurting my feelings, I think he did a very good job. But maybe his stock would have been up if he had appeared on Mad Money. I think you're fine. Evan in California. Evan.
Hey, Cramer. I'm a proud Cramerican living in the United States of Comerica. My question is about the stock ticker CYBR, CyberArk. A couple weeks ago, you said it was a great buy, but it's actually gone down a bit, about 15%. I was wondering if you're considering this maybe even a better buy now, or should we wait and see? I do, Evan. I mean, remember, I've liked CyberArk since the 30s, so I can't be a trader. I can't say, you know, at 140 I hate it, at 110 I like it, at 101 I hate it. I mean, to me, CyberArk's the same CyberArk. They had a great quarter, and even though the chart looks bad and people dumping all over it, it's good. I mean, if I were starting a position in CyberArk, I'd start it right here. Okay, let's go to Chris in Wisconsin. Chris.
Jim, booyah.
Booyah, Chris.
Hey, Jim. I'd like to hear your thoughts on the stock camping world. It's been getting hit hard recently, and curious to hear your thoughts, and also if you've made any progress on getting Marcus Lemonis on the show.
Well, Marcus has been on. the quarter wasn't that good. It started snapping back last week, but it just isn't doing that well. And I think that Marcus Lemonis is a friend of the show, but the company hasn't been doing that well, and I think that's fair. Look, neither is Thor. The camping world business, so to speak, is not doing that well, and a lot of that may be interest rates, but a lot of it just may be that they're out of favor. Okay. How the heck did we not tank in the wake of the Saudi Arabia oil tax? You know how? Because we are not the old United States. Victory for the bulls. Mad Money tonight. The Cloud Group has taken a beating over the past few months. But which stocks in the group could see their forecast clearing up? And which must be avoided? Sell. I'm giving you my take. Then this year has seen a slew of IPOs in the tech space. But is Cloudflare a standout? I'm eyeing the newly minted company just came public. And it's a company that's hoping to usher in a brand new gold rush. Don't miss my sit down with an outfit called Paxos to find out about its move to offer physical gold on the blockchain. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.